It's one thing for an analyst on TV to talk about where the economy is headed, but today it was the man in charge of the Federal Reserve. And when the chairman speaks, a whole lot of people listen. Today he said the bad housing market and soaring price of oil will slow the growth of our economy and keep it sluggish into next year. While others point to some strong fundamentals in this economy, the holiday shopping season starts soon, and so the timing here is not good. We begin here tonight with CNBC's Trish Regan. Trish, good evening.
Good evening, Brian. Well, Fed Chairman Bernanke's testimony comes at a critical time for retailers because going into the holiday shopping season, this is their opportunity to turn a profit and make some money. But a lot of people believe these higher gasoline prices could turn out to be the Grinch that stole Christmas. Today in Southern California, $3.39 a gallon for gas.
I don't make enough to keep up with it.
And moving higher.
Supplies are a little bit constrained, and everyone is worried about the crude oil market.
Gas prices just one of the reasons why Fed Chairman Ben Bernanke warned lawmakers today that the economy could see slower growth.
Household spending would grow more slowly, a reading consistent with the expected effects of higher energy prices, tighter credit, and continuing weakness in housing.
Consider this. This time last year, the average price for regular, $2.20 a gallon. Since then, it shot up 39% to $3.06 a gallon. Next month, the average family is expected to spend $100 more on gasoline than a year ago, which means less money to spend on everything else.
We won't be spending as much on Christmas this year for the kids just because it's getting a little bit tight.
That spells trouble for retailers as they head into the critical holiday shopping season. What kind of holiday season is it going to be for retailers?
It's going to be a train wreck under the Christmas tree.
Already there are signs of weakness. Today, retailers posted their worst monthly sales in 12 years. Walmart, Gap, Macy's all missed Wall Street's forecasts. And retail analyst Bert Flickinger says this is just the beginning.
Gas, groceries, milk's $1.50 more this year than it was last year. So every place a consumer goes, he or she has to spend more, and there's no way of making more.
And it's important to remember just how critical the consumer is. The consumer accounts for 2/3 of the overall economy, and so far has really proven quite resilient in the face of the whole housing downturn. But many believe with higher energy prices continuing to move higher, the consumer may just say enough. Brian?
Trish Regan starting us off where so much of this starts, at the gas pump. Trish, thanks. And this was another wild trading day on Wall Street. Dow was down about 200 points in the early afternoon. Then it rallied back up, closing down just 33 points. NASDAQ had a big down day, off almost 53. S&P finished down a fraction of a point. We told you here